Hey everyone, welcome back to the channel. Today we're diving into one of the most powerful ways to build wealth, investing in stocks. Now, I know what you're thinking. Stocks? That's for rich people or Wall Street traders, right? Wrong! Investing in stocks is actually one of the easiest and most effective ways for normal people, like you and me, to make money over time. But here's the problem. Most beginners get overwhelmed by jargon, charts, and scary stories of market crashes. The truth, you don't need to be a financial expert to start investing. You just need the right mindset, a clear strategy, and consistency. And that's exactly what this video will give you. A complete step-by-step guide to understand stocks, how to start investing, how to pick the right companies, and how to grow your wealth for years to come. So, if you've ever wanted to learn how the stock market really works, grab a coffee, sit back, and let's get started. Before you put a single dollar into the market, you need to understand what a stock actually is. A stock, also called a share, represents a small piece of ownership in a company. Imagine you own one slice of a big pizza. The more slices you own, the bigger your share of that pizza. That's how companies raise money. When a business wants to grow, maybe they need to build factories, hire more people, or launch a new product, they sell shares of ownership to the public. When you buy one of those shares, you become a partial owner of that company. And when the company performs well, its profits grow, products sell, and investors feel confident, the value of your shares usually increases. This is called capital appreciation. Plus, some companies share their profits directly with investors through dividends, small cash payments you get just for holding the stock. So, owning stocks means you're literally a part owner of businesses that make the global economy run, from Apple and Microsoft to Starbucks and Tesla. Okay, so if stocks are ownership, why bother investing at all? Why not just save your money in the bank? Well, here's the thing. Saving protects your money, but it doesn't help it grow. And over time, something called inflation slowly eats away at its value. Let's say you keep $1,000 in your bank account, earning almost zero interest. 10 years later, that same $1,000 might only buy you $800 worth of goods because prices keep rising. But if you invest that $1,000 in a diversified stock portfolio, and the market grows around 8% per year, after 10 years, you could have nearly $2,000. That's the power of compound growth. Your money earns money, and then that new money earns more money. It's like a snowball rolling downhill, small at first, but unstoppable as time goes on. And that's why the stock market has created more millionaires than any other investment in history. Now that you know what a stock is and why it matters, let's talk about how the stock market actually works. Think of the stock market as a giant marketplace, like Amazon. But instead of buying gadgets, people are buying and selling ownership in companies. In the US, the two biggest exchanges are the New York Stock Exchange, NYSE, and NASDAQ. Companies list their stocks there, and investors buy and sell them every second of every day. But here's what's important. Stock prices move up and down, not just based on company profits, but also on emotion, fear, hope, and hype. When investors are optimistic, prices go up. When they panic, prices drop. In the short term, the market is driven by emotion. But in the long term, it's driven by company performance. That's why smart investors focus on years, not days. Let's clear up a few myths that stop people from investing. Myth 1, you need a lot of money to invest. Totally false. Today, platforms like Robinhood, Fidelity, and Webull let you buy fractional shares, meaning you can start with just $10. Myth 2, investing is like gambling. No, gambling depends on luck. Investing depends on research, patience, and discipline. If you're betting everything on one risky stock, that's gambling. But if you're building a diversified portfolio and investing for the long term, that's wealth building. Myth 3, you can time the market. Even professionals get this wrong. Nobody can perfectly predict when prices will go up or down. That's why consistent investing, not perfect timing, wins every time. Myth 4, stocks are too risky. Sure, they can be volatile in the short term, but historically, the market always recovers. If you invest for at least 5 to 10 years, you're almost guaranteed to come out ahead. Here's a secret that most beginners don't understand. Stock prices move for a reason, but not always a logical one. Prices change every second because of supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people are selling than buying, it goes down. But the why behind those movements usually comes down to three things. 1. Company performance. If a company reports strong earnings, new products, or growth, investors get excited. 2. Economic conditions. Interest rates, inflation, and government policies affect the whole market. 3. Investor emotion. Fear and greed are the most powerful forces in the market. That's why the best investors don't react emotionally. They plan logically. They know that short-term drops are often opportunities to buy good companies at a discount. So, let's wrap this up. You've just learned how the stock market works, how to start investing, how to pick stocks, manage risk, and build long-term wealth. But here's the truth. Knowledge means nothing without action. Everyone wants to be financially free. Everyone says they'll start investing someday. But the difference between dreamers and doers is simple. Doers take the first step, today. Don't wait for the perfect time. There is no perfect time. Markets will always rise and fall. What matters is your consistency. Even if you start with just $10 a week, what you're really building isn't just a portfolio. You're building a habit, a mindset, a future version of yourself who's calm, disciplined, and financially independent. Remember this: the market rewards time, not timing. It's not about how early you start. It's about how long you stay invested. Those who keep investing through every up and down are the ones who win. In the end, you don't need to be a genius. You don't need thousands of dollars. You just need a plan and the patience to let that plan play out. Now, if you've watched this far, you're already ahead of most people. You've taken the time to understand how money really works, and that's something very few people ever do. So be proud of that. You're not chasing quick money. You're learning how to build lasting wealth. And trust me, your future self will thank you for starting today. If you found this video helpful, hit that like button, subscribe for more real talk about investing, money, and financial freedom, and share it with a friend who's ready to start their investing journey too. Because the more people learn this, the more financially educated our generation becomes. And that's how we all win. I'll leave you with one final thought. Greater than, don't work for money. Make money work for you. Thanks for watching, and I'll see you in the next video.